if we've had QE3 for that long and gold's price has suffered, I don't see any reason why. If Bernanke is telling us that everything's according to plan, that gold should rally. The drop that we've seen since basically this entire year was based on lower inflation expectations and the fact that we're not ramping up purchases, and there's still that underlying fear that purchases will be actually tapered. That gives gold a short. So that obviously flows into the bond short pieces. I'm also long the US dollar, once again through the yen, pound, and Australian dollars, as I think that those three currencies offer the best way to basically take on that long dollar trade from a macro perspective, as the Japanese obviously have an intent to devalue their currency, the pound as well, with Mark Carney. He's quite dovish, and the Australian dollar as well. That's also a China play. And I also have some positions in China as well. I don't have any positions in the U.S. equity market at this point. I am looking to buy on a reversal. I think we're going to see some sort of correction very soon. We are quite overbought. A couple of my studies that I've ran on the S&P, I can bring that up here. My correlation studies indicate that we could see a little bit higher momentum over the next few weeks, but we are nearing correction for sure. That could take us above 1,700, and then we see that pullback. But in that pullback, I think there's a great opportunity to buy, especially if over the long run you are risk off. It could serve as a great hedge as a developed market to emerging buy, develop, sell emerging markets. Sell emerging markets trade continues to go on. So yeah, that's what I'm looking at. Well, to me, there is no, as I play mostly directionally, to me, there's really no difference between a low volatility environment and a high volatility environment other than sizing. And there are different characteristics, of course, during a high volatility environment, a low volatility environment. But typically, in general, it's easier to play higher volatility environments just because you have more price movement and the long bias skew you have in the S&P and equity indexes. It's easier to take advantage of, whereas when we're in a low volatility environment and the market's just grinding higher, it's a little difficult to position, to take advantage of the direction to the upside. So, I mean, with regards to performance in the equity indexes, yes, it obviously has been affected, as I can't put on a position at this point. Yeah. Well, sure. I do right now my model on the TLT, which is the representation for the long year bond, which is basically 20 years plus, is slightly negative, slightly bearish. The last time we were slightly bearish was the 27th of June. And you can see the drop we had into 106 from 110. So it basically got short 110, bought 106. But yeah, on Friday, the 19th, it did get slightly bearish. And so yeah, it is. This is from obviously a technical and statistical perspective. All the inputs into this model are based on macro correlations between macro markets and specific price patterns. But from the fundamental point of view, it's basically what I was saying before with regards to the 10-year rate. And after what Bernanke has been saying, I like to look at what central banks say, especially when I'm looking into the currency market or foreign bond markets. And I like to see how the market reacts, because if Bernanke says, okay, everything's according to plan, QE3, we're not stopping these bond purchases, yet the rate only declines 0.1 when we've seen a move from 1.6 to 2.7. If we see hardly any reaction, that tells me the market is comfortable. And there is, once again, there's way more risk to the upside in yields, I think, than to the downside. So that's why not only is the technicals confirming, but the fundamentals as well. And so I'm short bonds. Well, of course, when you run higher, there is more risk to the downside just because you're higher. The bulls are in place, people are buying, but yeah, from what I'm seeing, my models in the S&P are neutral at the moment. They were bullish actually on the 18th and 19th, and we had that nice pop. So even though we're ramping into these new highs, I mean, a good example would be back when we were at 1600. We were ripping to all-time highs, but we still continued for another 75 points. So there's really, no tell as to when this market's going to actually reverse. I personally think, due to my studies and past historical models, that we are nearing a point, and just due to the equity and other market relationships, like we've seen, for example, emerging markets pulled back, starting, on that downtrend. I think once again, the key factor here is rates and the dollar. The reaction we saw in rates, basically nothing, makes the dollar look more attractive. Once the dollar goes higher, equities come in. So it really at this point, you're looking for a bounce in the dollar to see that correction in equities. But until then, the internal breadth that I'm seeing with the VIX closing down 2% today, advanced decline up slightly, fold up pretty good. That means up volume minus down volume on the New York Stock Exchange is pretty bullish. That's showing me that there's still strength in the market. Well, if I may interrupt, just because you're seeing smaller ranges, how does that give you a tell that there is some sort of edge? Because essentially you're saying if there's a smaller range today, that there would be a bearish inclination. Right. Okay, that's understandable. Yeah, of course. I mean, the more volatility, the better at this point. I think that goes for most traders. Even if you're directional, it's very difficult to buy something that is going to all-time highs. Sometimes it's the right trade. I don't think it's the right trade right now, but you know, it is difficult. No, of course. Well, of course it depends on how we move down, but any correction at this point, I mean, like I've been saying for a while now, since the market hasn't pulled back yet, one of my systems is on buy wash. Actually, two of them are, but my more aggressive one, once the S&P closes below the 5 exponential moving average, it triggers a buy. So we're getting really close to that. We just need really one big pullback day. And it enters a buy signal. So awesome.
Okay, Julian, you're off.
Cool.
Or
We're all
are
good?
we off? No, we're not off. Sorry, viewers. Now. Welcome back to Strategic Trading Radio Live. I'm your host, Alex Weisenbach. I'm just messing with the screens a little bit here so I can get everything configured. We're working on a little bit limited area right now for the trade. So I'm just taking a look at the dollar index. By the way, this is my live platform, guys, so there may be certain positions that are in. I mostly trade one lots considering the size of my account, just to let you guys know. So, by the way, guys, we're doing a live call-in segment where you can call into the show live with any questions you might want to ask. If you want to call in the show live, please do. I'm leaving phone lines open during the whole show, so if you want to call in, great, I'll answer your question immediately. If nobody calls in, that's fine. And then the number is 312-970-9058. That is Strategic Trading Radio. It was number, not mine, so nobody worry. I'm just going to switch around. Okay, so I was looking at a few stocks, and I'm just going to kind of show you guys how I search for things. There's a couple ways I look for things. I kind of look at, say, where the price is, like the S&P. There's no interest for me in S&P or certain different trading assets, but actually the yen does interest me as we're kind of in this ranging area. I'll kind of show you what sort of trades I'm going to have in. Alright, guys, so again, if you want to call into the show, the number is 312-970-9058 if you want to call in. It's right there up on the graphic, but we're going to go ahead and I'm going to go ahead and remove them. Excuse me, guys, but just give me 1 second to remove the graphic on the screen. I'm working with limited space on this computer, so I'm doing my best to try to run it. We're probably going to add another screen on this one, but this is a different computer than my trading computer, so I'm really sorry about that, guys. I'm just going to remove our little graphic, and then we're going to do full screen view. Okay, I'm going to go back to this here. Okay, here we go. So you're looking back at my screen. So I have a short put spread in FXY. I'm not managing the winner yet because it just became profitable. If you did a one lot, it's up about $8.50 on this. But for new trades, you could do the same right now, actually. If you want to, what you would do is you would go sell vertical. And then these are all my trades. Sell vertical. Okay, here we go. Sorry about that, guys. Okay, so sell vertical, and then for me, it's going to be the 97.95 puts for 50-cent credit. Max loss is going to be $150, so it's about... It is about, it's right around where we want to be. If you want to collect some more credits, though, you could do the 98.96 for 67-cent credit. Your max loss is $133, so you have a high probability of success. Probably wrapped around 166. Now I can get that exactly for you guys if I go here, calculator. Take my calculator. And then I can have, you take your with the strikes, which is everything's multiplied by 200 in the options market. And for any new viewers, if you want to call in, I usually would have the graphic up, but right now we don't. But if you want to call into the show live, just call 312-970-9058. Follow Google's instructions or anything that's asked, and then you'll be put through directly to me on my computer, voice over IP. Thank you. So definitely check this out. Now, once again, 312-970-9058. So we're going to go ahead with this. So everything's multiplied by 100. So with the strikes, your max loss is 133 divided by 200, which is your with the strike. You have a 66.5% probability of success if anybody's interested. And then you're going to be long FXY by looking at this. Now, lots macro traders, from a macro perspective, for whatever it's worth, it's probably worth shorting FXY, it makes a whole lot more sense to short FXY on a bounce because of the crappy situation there. And lots of traders believe that news doesn't matter, but actually news has been helpful in my trading. But otherwise, I think the market's too bearish in here. I think you can continue to buy yen. Again, it's the high probability of success put spread that I would do, but if you were to pair this stock, we could do something like this, where you could do a pair, and I have some positions in SPY also, but you can do a pair and take the correlation, and I just take a look right here. I would want to do the FXE. Sorry about this. So FXY, FXE, and then what you do is you sell FXE and then you sell FXY, and you'll do 100 shares. So what you do is you take, we're not in market hours right now, so we can't do the trade. I'm not available. Okay, so we're gonna go on. So I'll show you just how to set this up, and you're gonna take FXE, and then you're going to buy. You're going to buy FXE. You're going to buy FXE, and then you're going to do blast all, and then you're going to sell. You're going to sell. You're going to sell FXE. You're going to buy FXY, and then you have this 100 shares, and then you can pair it up to the actual value. So right now, I want to overhedge a little bit to this side. So you're doing this 2 to 1. One's gonna cost and this is the notional on it. This is a little too big for me, but it's a possibility to do if you want to do a pairs trade. Just to be totally open, guys, something really funny to me happened, and I want to talk about earnings plays. You kind of have to be careful when you do earnings plays, because sometimes you make the mistake of doing an earnings play that actually already occurred. So I tried doing an earnings play in TXN, which is Texas Instruments, and I can be totally open about my position here, so I'm going to try. So this is yes. Okay, so I sold an iron condor in here because I thought there was going to be an earnings play. But turns out that earnings happened that morning and I didn't check for it. So I'm stuck with this weekly iron condor coming to expiration. So you have to be careful with this, but again, if the stock stays between 38.5 and 36.5, I'll be good. Just want to let you guys know that you need to be careful when you do earnings plays. Really make sure that there really is an earnings play to do. Next. A while back, also Julian was talking about mostly the S&P and bonds, but I want to talk a little bit about gold also, and then we're going to look into some things that we can do in gold. Let me just go, how about we'll try 6 months, 6 months in gold, and I'm thinking about taking in some shorts in gold, especially if we get up here. I already have a short position in GLD, but considering you can definitely take some more shorts in gold. And on the next segment, we're going to go ahead and talk about that. On the next segment, we're going to go ahead and go on a commercial break. Thank you for listening. welcome back to Strategic Trading Radio Live. I'm your host, Alex Weisenbach, and I am 12 for you guys to know if you are interested in knowing who I am and what my age is. So guys, I had to go on commercial break because actually it was funny. One of my family members, she needed to know what I was having for what I was going to have for dinner because we're ordering from a restaurant. So I might have taken a little bit longer. Sorry about that, guys. So we're going to go back to talking about gold. So for me, gold's like a huge, you have to understand this, guys, that, delete old drawings. You have to understand this about gold is that gold is a huge, let me tell you, huge. It is a ginormous futures contract, and so you have to be super careful with it. So, of course, I can't trade the gold future. Then we're gonna have to look at GLD. So I don't really want to pair this in any way, or I don't want to do anything with it. I could do a gold-silver pair, which would be gold minus silver, and then I could easily put the identity in, and then I'm just going to do something quick here. And then for me, I'm shorting gold, get long silver for your guys' information, but I'm just doing a quick adjustment on the screen here. I'm going to do, okay, lower left, here we go. I'm just adding the little graphic for the show. If anybody wants to call into the show live, I'm leaving the lines open. Feel free to call in. If nobody wants to, that's okay. But the number is 312-970-9058, and that is Strategic Trading Radio's number. If you wish to call in, feel free to call in and ask me a question, whatever you want. Again, the phone lines are only open between 4:30 and 5:30, so do not try calling at any other time. Okay, so this is just the little graphic I have up. Okay, so you're looking at gold minus silver. So you could definitely do a pair and sell it right up here, sell gold into strength. Maybe you want a little bit more of toppy action, so be careful with that. But for me, I'm much more likely to do one of two things. Do a position in silver, so let's take a look at silver, a little cheaper. Gold, a little more expensive. So, obviously, I'm going to do the trade in gold. Yeah, and I did not actually short gold today, but I think I will. Okay, so, you go to gold, and if you want to get bearish, actually looks nice because the calls are a little more expensive than the puts. So what you're going to do is you're going to go sell a call spread. Now this you can get for a 47-cent credit for a 53% probability of success. So if you want to go down further, you can sell these for about $2. Sell vertical. And then I'm going to within the strikes for me. So you can within the strikes for about 74 cents. Your max loss is 126. Gives you a probability of success like around 60%. You collect a little more than 1/3 the width of the strikes, and you can have a bearish position in gold. Now again, for a lot of us, we have too many short deltas on, and it's extremely hard to find long deltas. But if you really are like going and you really need some long deltas, you can check out BlackBerry. Now let me just get rid of the graphic, guys, because the thing is the graphic doesn't make sense. But again, for any new viewers, if you want to call in the show, 312-970-9058. And let me just deal with the graphic we have here. So source B. I'm just going to move our graphic here. We're back at full screen, so no more graphic. Okay, here we go. We're back. So we're looking at BBRY, and I have this position on. It took me a while, but it would make a lot of sense. You see, the puts here don't make a whole lot of sense, and then if you look at the implied volatility, it's in the 21st percentile because they'll show you volatility coming into this has been crushed, and I don't know why I have technical analysis up. but volatility coming into that has been crushed. So we can't do a credit spread. But if you really are desperate for some long deltas and you really need it, you can just buy a vertical. Buy 1 34-cent debit, low probability of success. Override. Okay. So I'm gonna have to change this just a bit. So I'm gonna buy the 8-9 vertical. So I'm buying the 8-9 vertical. And then I am going to sell. I'm going to sell the 10, giving me a $1 debit. Probability of success slightly above 50%. It's like 51%, and it can give you some long delta. I sold a credit spread when it made more sense to. Now I'm down just a little bit in it, but for now you just have to buy debit spread. Otherwise, if you really need some long deltas, you can do a hedge trade in DIA. As you can see, I have a hedge trade here. It's been super profitable. Unfortunately, my hedge trade, I hate it when my hedges are profitable, because then my major trades are down because you're at a loss. But what can you expect in this low volatility environment? Is nothing much more than a loss, unfortunately, and you just have to deal with them. It's getting really tough to deal with the markets right now. They're being just a big pain. But I'm just taking a look at the implied volatilities here of all the stocks. Another short delta trade. This Tesla's actually an interesting short delta trade, and we'll talk about that last. You have JC Penney being decent. TZAX, GDX, Facebook, and then we're going to take a look at the implied volatility percentile. If we look here, the highest here is Pepsi, but their implied volatility is 18%. We could take a look at Microsoft. Let's take a look at Microsoft. For Microsoft, I actually think you can get long this stock. I'm going to stay super small, though, because I'm not really sure what it's going to do. And I'm just going to take another look at GameStop. Alright, so, couple trades. Microsoft, sell a put in Microsoft, but the thing is, there's not a whole lot to do. So you can't sell a put, but if you really want to, you could sell a weekly put for 13 cents, but again, that doesn't make a whole lot of sense either. You could probably do the buy, you could do a covered stock position real easily, and you can do the covered stock position, brings down your cost basis to 31.31, so you have an additional 70 cents, you're looking at about a little more than 2% move in the stock until you start losing money by expiration. So you could do the 32 covered call, and if you want to take a little more risk, but I think this is going to lower your, you can max profit. You can do the in the monies. You just take assignment risk, so you take covered stock in the money, lowers your cost basis about $1.32, but again, that doesn't make a whole lot of sense. So you're going to want to do the one strike out of the money. You're going to want to do the one strike out of the money, covered stock, reduces your cost basis about 70 cents, and you can get a high probability of success and make some decent money on that. Okay, so guys, this show's all going to be archived and recorded so on Ustream.com, but if you want to check out Strategic Trading Radio's website, it's strategictradingradio.webs.com if you want to check that out. And I'll just, for any new viewers coming in, if you want to call into the show, feel free, and I'm just going to, the number is 312-970-9058, and you'll be put right through. Just follow the instructions that Google will have for you, and then you'll be put right through on one of our lines. Let me just add the little graphic for you guys. Add picture file from disk. I'm just going to add the number for you. Okay, so call in live, Strategic Trading Radio. Oh no. I'm having a short little technical difficulty. Let me just see lower left, and then I can get this working maybe. Okay, so besides that, I think I'll just do a quick rundown on some of the futures for you guys. If you missed some of the show, you can definitely check the show out at strategictradingradio@gmail.com. So let me go ahead and bring the screen back up. Okay, here we are. We're back. So I'm just going to go through some of the major markets. First of all, the S&P. I think you can sell the S&Ps right now, and then we can just wait for a move down to 1550 would be decent enough. I think if we get past, it depends on how we fall again, but if we even get down to 1500, I think you can start getting ready to buy unless we have some sort of major issue with it. So 1500 looks like a buy, but for now stay short. It doesn't make any sense to stay long. And even if you want to get long, you need something like it to fall to here and bounce off, who knows. But I would be careful staying short, and I would be pretty nimble with your positions if we get any kind of down move. Until then, don't do a thing. Next thing we're going to look at is the Dow Industrial. And I'm just looking at this just for the sake of seeing large cap stocks. We're seeing a little bit more weakness in the large cap right now, and I'm a tape reader, so if you're not going to see any technical things on my chart, maybe just a few drawings, but that's nothing technical analysis based. What's really been strong is the Russell. I think you can sell Russell like crazy here. Now, a great pair to look at is the ES minus TF, and what you're going to do is you're going to sell a whole lot of TF and then buy ES, or it may make sense to sell the ES and buy the Russell. But I wouldn't go like naked with these positions. I would definitely spread it off. It would make more sense because all you want to do is for the spread to close up. Next, bonds. Okay, bonds here. I think, like, up in here, I think you can definitely sell bonds. I have a short position bond. I have a short TLT call spread, and I can bring that right up for you guys, just for you guys to know. I'm short TLT, the 110, 112 call spread. And I'm sitting at a very tiny, minuscule loss on that. But, you can definitely take shorts in this area. Bonds, I mean, it just makes sense. You can see, I think we can continue to see a spike in interest rates. We pulled back a little, but just for you guys to know, I think we can continue to spike in interest rates right here. Okay, last few things is I already talked about the 6J, the yen, but I'm going to talk about the euro. I think there's a couple things you can do. You can, if we go up into the 145 zone, you can short the euro. Right here, I think the euro still could be a long, but it's also shortable, so I'm not really sure about the euro. Again, the situation there is just crappy. And just to let you guys know, to be careful on Netflix right now because Netflix's earnings came out. So if anybody has any positions in there by any chance and you weren't paying attention to Netflix, well, just to let you know, it had earnings and we've seen this. We crashed down, now we're up at 247, so we're only down a little bit, but be careful because who knows what's going to happen by the open. Okay, everybody, thank you for listening. For anybody who is interested or missed part of the show is recorded at our Ustream webpage, but if you want to access that, just visit strategictradingradio@gmail.com. We had no callers today, which is fine, but again, the lines are going to be open for another 12 minutes, so if you want to call in without being on the show live, that's fine. Also, just call in. The lines are open between 4:30 and 5:30. The lines will not accept calls on weekends or any rest part of the day. The shows are live Monday, Wednesday, and Friday, and if you have any questions, comments, or anything, send an email to strategictradingradio@gmail.com, or if you want to call me directly, if you want to email me directly, send me an email at alex.optionstrading@gmail.com. I hope you enjoyed the show. Thank you for listening. Hope you enjoy the show. Thank you for listening.